Ether now tops Bitcoin as the largest crypto asset for institutions. This is according to Bybit research, and they seem to be speculating that this may be because of a potential upward swing from the Denken upgrade. Today's episode is sponsored by Cake Wallet, where you can send, receive, and even exchange your crypto right from within the wallet. Cake Wallet is open source and non-custodial, so you control your own private keys. Available today on iOS, macOS, Android, and Linux. And StealthEX, a privacy-centric crypto exchange which enables you to make crypto-to-crypto exchanges anonymously. Good evening everybody, and another warm welcome again back to Enter Crypto. Now in today's video we're going to be talking about institutions, large institutions, Ether and Bitcoin, because there is now some new research out done by Bybit that says that Ether is now basically larger as far as crypto assets holdings for institutions is bigger than Bitcoin. So as always guys, let's quickly read through this article and then we'll see what we can learn and we'll comment after. So institutions are over-allocating their portfolio to Ether, followed closely by Bitcoin, which is a contrast to retail users who are much more bullish on the latter, a new report from Bybit Research said. Institutions have increased their portfolio concentration in Bitcoin and Ether to 80%, with a significant bet on Ether due to the anticipated Denken upgrade. This is according to Bybit's report, which surveyed traders with assets in the exchange. Meanwhile, retail users have a lower concentration in these assets and a higher tilt towards altcoins, the report added. Ether, which is now trading above $3,100, and actually at the time this video came out it's over $3,300, has outperformed Bitcoin with a 33% rally year to date, driven by factors such as its deflationary supply since the shift to proof of stake and low levels of ETH held on exchanges and increased staking activity. In a recent report, Bernstein analysts Gautam Chugani and Mahika Sapra also highlighted the growth of Ethereum's DeFi ecosystem and Layer 2 networks, as well as the anticipated Denken upgrade as key catalysts for ETH's performance compared to the world's largest digital asset. This market sentiment had changed from December when Bybit published its last report, which showed that institutions were bullish on Bitcoin, mixed on Ether, and were moving more of their Ether and altcoin holdings into Bitcoin in anticipation of the Bitcoin ETF being approved. Bitcoin is up 20% since the beginning of the year, according to CoinDesk indices data, outpacing the performance of the CoinDesk 20, which is a measure of the largest digital assets, which is up 12%. Bybit also observed that institutions have significantly reduced their altcoin positions, particularly in volatile categories like meme coins, artificial intelligence and BRC20 tokens, despite their high returns in 2023, instead focusing more on stable assets like Layer 1 tokens and decentralized finance protocols. And so this is quite surprising actually. Well, it's surprising and it's not surprising, if that makes sense, in that retail has always, the average person has always liked Bitcoin because it's a lot safer, or it seems to be a lot safer than the other cryptocurrencies. It's certainly less volatile than the other cryptocurrencies, even though Bitcoin in itself, when you compare it to any of the other assets in the rest of the world like gold and securities and property, is extremely volatile. But when you just look at the tokenomics, shall we say, of Ethereum or Ether and Bitcoin, they're not that different. And in fact, Ether looks more attractive from an investment point of view. And these companies have, people, they literally pay analysts and pay people to spend all day as their job looking at investments and what might be good, especially within crypto, whereas the average man doesn't. He just has his own brain, and he just has to see what he thinks and make his own mistakes along the way. And so companies, although they're more risk averse, they actually can afford to do a lot more research and go and dive a lot deeper. And so when you compare the two just from an investment and just from a making money point of view in the tokenomics, you look at the inflation, Bitcoin is disinflationary, meaning that it's inflationary, the circulating supply grows. However, every 4 years it's halved. So over time, the inflation gets halved. This is not the same as being deflationary, which is where the currency, the circulating supply of that currency reduces. This is actually, the inflation rate is reducing every 4 years. And so that's disinflationary. With ETH, the more it gets used because of EIP 1559 that came in a couple of years ago, the upgrade, it actually can become deflationary. So the more that it gets used, the more ETH gets burnt, and so obviously Ethereum holders, Ether holders get rewarded because there is now less Ether competing with their holdings, and so there's an unlimited amount of dollars out there competing for a very finite amount and growing, getting less and less. The supply is reducing of ETH. So this is obviously in dollar terms, you can make a lot of money in this. And that's not looking at the functionality, or that's not comparing what Bitcoin does compared to Ethereum, under the hood, technological or anything like that. That's just looking at it from just a pure price point of view and the scarcity of the two assets, how they compare. So that's why I don't find it surprising in many ways. And I think as long as you're confident that Ethereum is going to stay relevant, which I think it is, because Bitcoin can't replace Ethereum, it's highly unlikely, and and vice versa as well. They just do different jobs. Bitcoin is not better than ETH, and ETH is not better than Bitcoin, in my opinion. They just do different jobs. Ethereum's all about tokens and tokenization of assets of everything, as is Polkadot, as is Cardano. Whereas Bitcoin is about value, value being transferred on the internet. So a really interesting article there. Let me know in the comments below if you agree or disagree with me. I'm always interested in hearing people's opinions, even if they are of opposing views. Thank you for watching. Thank you for listening. Don't forget to like, subscribe, and click on that notifications bell so that you don't miss out on any future updates. And I'll see you all tomorrow evening. Take care.